I'm San Rabipati. I'm the co-founder and CEO at Veda, and you're watching Taking Stock.
2 minutes ago, here into the close, the major market indexes at this hour as we head into the closing auction here on Wall Street are in mixed territory. We are seeing a little bit of buy-side pressure here for the S&P 500, up about 0.05% in the New York Stock Exchange. Composite index expected to finish at yet another all-time high for the fourth consecutive day. All of this as investors continue to digest a far better than expected January jobs print that saw the U.S. economy adding, at least for now, before we maybe get later downward revisions, 130,000 jobs for the U.S. economy, and the unemployment rate going from 4.4% down to 4.3%. Staples, materials, as well as utilities, those are your strongest performing sectors in the S&P 500, and your laggards in the S&P at this hour include financials, telecom, as well as discretionary stocks. Welcome to the show, one and all. You are watching Taking Stock, and I'm your host today, JD Durkin. Mere moments away from the ringing of the iconic closing bell, and man, oh man, is this ever a closing bell. Not only is the team from Scotts Miracle-Gro set to do the honors, but the one and only Martha Stewart is also joining us down here at the big board. And we also got the great Jay Woods. He's on deck. He'll join us right after the bell for his take on today's price action, earnings season, and much more. Yields up across the board. Gold and silver both up on the day as well. And the oil benchmarks, WTI and Brent, are both up, but not really a much dramatic move. We will pick up our market coverage on the other side of the bell and bring in Jay Woods in just a bit. But first, time for the closing bell. That's how you hit the gavel. You got to hit the gavel with some authority when you bring about a close to trading here on Wall Street. Your final tail of the tape on this Wednesday, February 11th, the S&P 500. Look at that. Down 1/100th, maybe now flat. It always takes a minute or so for the numbers to settle in. The Dow will call down, let's call it 0.1%. The New York Stock Exchange Composite Index at another all-time high, and small caps down about 0.4%. Let's not delay things any further. The man you are here to see, the one and only Jay Woods, Chief Market Strategist at Freedom Capital Markets. Thank you for being here as always.
Oh, always great to be here on a Wednesday.
You, me, and Martha Stewart here bringing about a close.
Shout out to Martha Stewart. Looking phenomenal, and the great people at Scotts Miracle-Gro doing good things.
Absolutely. About an hour ago or so, I listened to our friend Tom Lee. He called this a confusing macro environment for investors. How are you approaching the macro environment given the jobs report today, the CPI print on the horizon? There's a lot of stuff going on here, Jay.
Yeah, I think that's a very good assessment. Mr. Lee usually a little more optimistic, so hearing him say confusing is confusing. But the macro environment, we got that jobs number. The BLS has gone through some changes. A lot of people questioning the significance of that jobs number. The revisions were a little unexpected. We got a great rally off of it, and then it faded. And what have we done? We've closed less than 1 point down in the S&P 500. Yeah. Don't think I've seen a day like that in quite some time. It doesn't really tell the story of what happened today. The big rally, the sell-off, and now to close unchanged. That is confusing. The CPI comes out on Friday. That's inflationary. That's the data I think the traders are going to chew on a little bit more. That's the data that really puts the market in a new direction. What that direction is, we'll see. 7,000 seems to be that ceiling. And if you go back the last 6 Fridays, the S&P 500 is closed right around 69.30. Yeah. The activity to get us to that number, a little crazy. But it's about rotation. Tech is still struggling, but those other sectors, materials, industrials, they're doing extremely well.
Yeah, we had a big conversation about the Bureau of Labor Statistics redoing the birth-death model for businesses specifically, and this is a print that not a lot of people expected, not just to see unemployment tick down, but 130,000. We also had the big downward revisions for 2024 to 2025. Had this been on your bingo card, that these would be the numbers we'd wake up to today, especially because, not for nothing, the White House kind of downplayed the expected numbers in yesterday's media cycle.
Well, we had 2 officials from the White House, Navarro and who was the other one?
Kevin Hassett, I believe.
Kevin Hassett, thank you very much. They kind of gave us mixed signals as to what to expect, and usually when you hear someone from Washington, you're thinking, oh, they know something, maybe something's going to happen. It looks like the goalposts have changed a little bit when it comes to the these numbers. Right now, seeing that we're flat, it didn't affect things, but we have to watch this going forward, exactly how they report it, what the revisions are going to be, and that's why I think the CPI is going to be much better indication as to what's going on. So jobs number, 4.3% unemployment, ticked down a little bit. If the CPI comes in cooler, it's looking for 2.5%, down from 2.7. That is very good for the Fed and their dual mandate, but what does that mean? We don't need to cut rates. And what does the president want us to do? Incoming Fed President, Mr. Warsh, if he gets approved, which I believe he will, after a lot of drama, by the way.
Yeah,
but
really.
he will get approved. Will he be able to cut rates? I don't know. It's going to be very interesting to watch. Powell has 2 more meetings. I don't see why he would cut rates. We'll talk about that next week. But right now, we're still at or near all-time highs with the cycle of rotation in play. That's not a bad thing.
Can I get your take on what we've seen out of earnings this week? Correct me if I'm wrong. Was it 78 of the S&P 500 companies, including 3 Dow components, reporting this week? That includes Coca-Cola.
Yes.
I know you were tracking that in your newsletter. Sign up for Jay's newsletter, by the way. I tell you this every week. What have you seen so far? Any big surprises?
Well, we're rated on McDonald's after the bell today. I thought they were this morning. I don't know what happened there. But the surprises are this. The staples, we'll go to Coca-Cola, had a nice run going into the earnings. Earnings were okay, and it fell back. The earnings that are surprising are those technology names, especially in software, that have done very well. Palantir, the prime example. Microsoft, solid quarter. And what did they do? Microsoft got punished because of their CapEx spend. Palantir, it rallied, but you look at it as a technician, the behavior, the sentiment has changed. So they are selling these stocks, and they're waiting for maybe another quarter's worth of data before we get their legs underneath them. So the good earnings narrative isn't following through. Let's see if that happens when other sectors report. Let's look at retail in the coming weeks. We have Walmart next week. That one will be an interesting tell. That's another stock in the staples, the number 1 staple, that has rallied tremendously into earnings. Can it follow through? I'd be surprised regardless of what they report.
All right, the great Jay Woods, Chief Market Strategist at Freedom Capital Markets and a CNBC contributor, helping us kick off the broadcast here on Taking Stock, my man. Thank you for being with us. It's always perfect when we're framed up because I do the interview. We got Jim Cramer's Eagles helmet right behind you. It just frames the shot so beautifully for you,
I appreciate
a diehard
that.
Birds fan.
Well, football season's over. We're on the same team. The Olympics are in play. So
let's go.
Let's go
USA,
Exactly.
USA, my man. Thank you for being here. We'll talk to you soon. Jeff, you and I will head this way and go for a walk. We're bringing the latest quarterly results out of the team from Shopify, which did report early this morning before the bell. A big drop in the share price despite a revenue beat for the holiday shopping quarter and a $2 billion buyback that was approved by the Shopify board. The company did miss on bottom line, reporting 48 cents adjusted EPS versus the street's expectation of 51 cents. They did give strong guidance, I got to say, all things considered, for the next calendar year, 2026. They said any fears over AI-driven software are overblown, but shares of Shopify already down here year to date about 30%. Jeff, we'll take a look at 2 New York Stock Exchange listed companies, and they are very notable here on this Wednesday. We'll start with ticker symbol T. AT&T, as in one of the better performers in the S&P 500 today, at least out of the opening auction. It kind of gave back some of those gains late in the afternoon. In a strong uptrend, the stock's up about 24% from late January. That's when it reported quarterly results. Wells Fargo analysts recently maintaining their overweight position on the stock. Shares are up about 15% or so over the last 52 weeks. And how about a look here at Salesforce? This is CRM, got hit on the day, down almost 4.5%. The Dow component continuing to spiral, falling to a level it has not seen since March of 2023. Going against the stock, a lot of big storylines: the disillusionment of software as a service, growth deceleration concerns, the recent exit of 5 senior executives. It is the worst Dow performer so far year to date. Shares of Salesforce down already about 30% here in 2026. The New York Stock Exchange's very own Kristen Scholler sat down with FDA Commissioner Dr. Marty Makary to discuss the importance of radical transparency. We now bring you that interview. Take a look.
Dr. Martin Makary has led the U.S. Food and Drug Administration since March of 2025. He's here at the New York Stock Exchange today for a New York Bio event and joins me on the trading floor. Dr. Makary, welcome.
Great to be with you, Kristen.
Great to have you here at the exchange today. Of course, we're sitting down in December of 2025, a little under a year since you've been at the helm of the FDA. How are you working to modernize the agency?
Well, I was a cancer surgeon at Johns Hopkins before coming to the FDA. And when you're at the bedside of a patient, especially when you have to break bad news, you want to think about, why are there hurdles and barriers and idle time in bringing more cures to patients? And so we've got to challenge the deeply held assumption that it needs to take 10 to 12 years for a new drug to come to market. So we're doing a lot on the streamlining and modernization side. We've reduced animal testing requirements. Many of the animal tests are not necessary. We've announced just recently allowing real world data to be admitted to FDA applications. The requirements in the past for real world data to be in the application has been so onerous that hardly any approved drugs have actually used real world data. We can learn a lot from real world experiences. We've reduced the clinical trial requirement from 2 pivotal trials to 1 pivotal trial, which allows companies to run double the number of drugs through these trials. So we want to reduce unnecessary waste and idle time.
Is there a way to quantify the drug development efficiency that you anticipate to see under your leadership at the FDA, including in some of these high need areas?
There is. I think, first of all, I'd like to see in our time at the agency a cure or meaningful treatment for type 1 diabetes, for some neurodegenerative cruel diseases, for certain phases of cancer where we've seen in early studies drugs melt away a cancer so you don't need surgery or chemo or radiation. I mean, these game-changing results, like the one we just saw published for multiple myeloma, they deserve a rapid review. So we have a new pilot program to get decisions out from the FDA in a matter of weeks. Now that's unprecedented, but we're doing this in a pilot program to evaluate what can we do better to reduce idle time and use our convening power rather than farm the applications out to separate agencies. We also need more clear guidance to companies so they don't have to do guesswork, which can add a lot of time and expense for companies. We want to make the process clearer and more transparent. And so one of the things we did is to make our rejection letters public information for the first time in FDA history so that drug developers can see exactly how the reviewers in a particular study section think in what they want to see in a trial.
I do want to talk about trust in the FDA. We did see it come under pressure during the coronavirus pandemic. Now, as you're at the helm in 2025 of the FDA, how are you looking to restore confidence in the agency?
Well, first of all, I'm very proud of the medical profession. And to see that public trust in doctors and hospitals went from 71% of the public trusting us in 2019 to just 40% last year, the year before I came to the FDA. That is an American tragedy. And so we've got to show humility. During COVID, sometimes the right answer was, we don't know, and we should have said that. And we're going to do everything we can to show humility in our work. We're going to make adverse events transparent on a daily basis. We're going to modernize the agency. We're going to do what we can to be honest with people. We just announced that we're revising the black box warnings on hormone replacement therapy for postmenopausal women. They were fueling a 23-year-old dogma that hormone therapy for postmenopausal women is going to increase your risk of dying of breast cancer when no clinical trial has ever supported it. So where we can be more honest, we're doing the same with the OxyContin label, which has not been appropriately updated. So we're going to do everything we can to be honest with the public and let people know what we're thinking in real time as we're thinking about new reforms.
And Dr. Martin Makary, Commissioner of the FDA, thank you so much for joining us here at the New York Stock
It's great
Exchange.
to be here in New York. Thanks, Kristen.
Welcome back to the show. You're watching Taking Stock. Time now for the latest headlines in the world of fintech, crypto, and artificial intelligence you need for your Wednesday afternoon. First up, the crypto majors are down at this hour. Bitcoin down about 1.8% on the day. ETH and Solana both down about 3% and change. Next up, Jeffrey saying that Tether now holds an estimated $23 billion worth of all asset classes. Physical gold, about 148 tons, putting the crypto firm ahead of several nation states as it builds hard asset backing for USDT and its gold-backed token. And finally, major lenders including JP Morgan Chase, B of A, Goldman Sachs, they're all urging the Trump administration to block interest payments on stable coins. It's an ongoing standoff with crypto firms like Coinbase and others that has left key legislation stalled in Congress. Our second guest of the broadcast now joins us remote. This is Hisham Shaheen. He is the CEO of NIP Group. Hisham, really nice to have you join us here for Taking Stock. First and foremost, give me your take on really what your top priorities right now. Do you consider yourselves an esports team? Are you a Bitcoin mining operation? A little bit of both? How do you position yourselves in the market right now?
Yeah, thank you for having me on today, JD. I think first and foremost, NIP is a digital entertainment company which combines infrastructuring quite heavily. And in that sense, our goal is to bridge gaming, live experiences. We have incorporated large scale Bitcoin mining and AI ready compute platform per se. So the company is moving very heavily into the mining space and as well as what comes next in that with other areas of compute and AI.
Hisham, if you don't mind me saying, that's a lot of priorities going on at once, so I tip my cap to how busy you and your team must be. How do you go in about determining what priorities now to focus on a bit more? What do you put ahead of the line and top of other things?
Yeah. So the company is naturally born outside of esports and gaming. It diversified into broader digital entertainment. And the next phase of the company's growth and what is taking us to the next level is us announcing our entry to the Bitcoin mining space. And in the course of the last 6 months, have built up a capacity of 11.3H, which puts us on the list of the top 15 listed US miners, as well as the largest miners of Bitcoin in the Middle Eastern region and North Africa. So really what is native to us is gaming, and then we're moving very heavily into the mining space and what comes after.
Hisham, we're covering Bitcoin pricing here on Taking Stock every day. It's trying to find its footing right now down to 67. It's been even lower to 66. Find some resistance right now around 70. It is well off its highs from several months ago at 125, 126. How, if at all, does that impact your ongoing mining operation?
In general, I think the mining operations at NIP is in fairly good shape. We've entered the space this year, and with how it's built, how it's financed, it provides us a lot of flexibility in terms of our holding periods of points. So we regard ourselves as long-term believers in appreciation of Bitcoin prices, and we are holding on to what we mine for the long term. And in general, what you will see us doing is whenever you see an appreciation in prices, and if we deem that attractive and we have good margin, maybe we one day become sellers of coin to take in some profits from that.
You got partnerships in Abu Dhabi, China, and beyond. Talk to us all about those partnerships. What do they actually look like in practice, and how difficult is it to actually forge those relationships, Hisham?
In general, the company was born in Sweden. After a 10 years period of scaling the operations, we managed to build solid foundations on 3 continents. So going from 1 office to 9 offices, and then ultimately listing on NASDAQ in the US, had us looking for a place to centralize operations. And in terms of placing our headquarters in Abu Dhabi, landing a major $40 million partnership with the government here, we essentially found a home where we could consolidate a global HQ to consolidate all our global operation into a place which is easy accessible, good time zones, and has great potential. And especially if you look at the mining space, the potential that this region holds is that it's very forward thinking when it comes to AI, to mining, the regulatory environment, what comes with taxation, where they essentially have an empty, clean drawing sheet where they can set precedents, and for us to be part of that journey in order to essentially establish what is a world-class operating environment for a company like ours.
Congratulations on all the success to you and everyone at NIP Group. Hashan Shaheen is the CEO of the aforementioned NIP Group. Come back on the show anytime. Thanks for joining us. The rest of you watching at home, don't go anywhere. Much more Taking Stock coming up after this quick break. Let's rock and roll, folks. Welcome back to the show. Time now for a few headlines in the world of startups, raises, and rounds you need to know for your Wednesday afternoon. First up, Bloomberg reporting Abu Dhabi-backed MGX is close to joining Anthropic's huge funding round. It's a deal that could top $20 billion and value the OpenAI rival somewhere around the ballpark of $350 billion. These valuations are off the charts these days. Next up, TechCrunch first to report that former GitHub CEO Thomas Dohmke raising a record $60 million seed round for his new dev tools startup called Entire, valuing the company at $300 million as investors bet big on tools built for the age of AI coding agents. And finally, on this Wednesday afternoon, Reuters first to report Apptronik raising $520 million at a valuation of about $5 billion. It's got backing from Google, Mercedes-Benz. All this as the race to deploy humanoid robots in factories and warehouses continues to accelerate. All right, let's say hello to our third and final guest of the broadcast. This is Nate Baxter, President and COO of the one and only Scotts Miracle-Gro. Just got off the podium here at the big board, ringing the closing bell to bring about a close to trading today. Welcome to the show. Nice to have you.
Thank you for having us.
First of all, can I get your experience, not just of doing the closing bell, but I was stunned to sit down here at 3:50 p.m. right before the bell, and I said, wait a minute, is that Martha Stewart who
Yep.
just walked here on the floor? What is the relationship with Martha Stewart, and what was it like today?
Well, first of all, today was outstanding. You know, being able to celebrate 30 years on the exchange and look forward to the next 30 is just a blast. And then when you put it in the context of where we're trying to take this business and modernize it, it's all that much more special. What I'll say about Martha is she's our Chief Guarding Officer. She is outstanding. And I think it's important for people to know she's not just sort of our creative and educational talent. She's actually a meaningful partner on the business side in terms of product portfolios, strategies. So, and she's just wonderful to work with.
Absolutely. I got no doubt about any of those things, especially her business prowess, which she brings to the operation. You talk about your opportunities to grow, to continue to scale, grow, no pun intended, but well, now let's throw it in. What does that look like for you, especially in a little bit of a challenging macroeconomic backdrop? The word of the year continues to be uncertainty.
Correct.
But hey, you got a business to run.
We do, and I'll start by saying that traditionally our business has been pretty resilient to downturns and recessions. You know, it's a pretty low-cost way for people to enjoy their time at home in their green spaces, so we're sort of lucky in that sense. When we look to the future, you know, we really see a massive amount of opportunity. You know, we didn't really have to hunt for inorganic growth. We've got household penetration, even for our biggest categories, it's only around 10% in the DIY market. So just that alone is tremendous opportunity. We've got a new generation of consumers starting to become homeowners between Gen Z and some of the younger millennials. That's a big opportunity, and you'll see us pivot with more organic and naturals, which is sort of what that consumer wants. And then there's e-com. You know, our market share in brick and mortar is north of 50%. Our market share in totality in e-com is less than 15%. So when I look at those factors, I see a tremendous amount of opportunity for organic growth.
So I'm 38 years old. I'm a millennial. I got a lot of people my age. They are first-time or would-be home buyers for the first time entering the market. Do you have to stick with the old core values that have always worked for the brand, or to your point, how do you evolve as younger would-be home buyers are entering the market, different concerns, different backgrounds,
Absolutely.
but ultimately maybe a lot of those same goals in terms of lawn care?
No, without a doubt. Listen, I think everybody has the same goal, whether it's the aesthetics, more and more, it's about being out in that green space for wellness, whether it's mental or physical. But you're right, you know, you as a consumer is very different from our baby boomer sort of core consumer today. They care more about efficacy, they care more about results, they're maybe more willing to put down a synthetic fertilizer. I think the younger generation has two challenges. One, we're trying to make sure we have products that meet their needs, the natural and organic. Two, we have to educate them. I don't know about you, but I learned this from my father, but not everybody had a family environment where they learned about lawn and garden care. And so one of the imperatives for us, and that's part of what Martha's here to help us do, is how to educate consumers. And of course, we'll do it not only through spokespeople like Martha, but we'll use AI tools and other approaches to sort of get people engaged and help them learn how to use the products, because that is a friction point, and we need to make that easier.
I'll tell you, I live in a fifth floor walk-up in Queens, New York. I wish I could have a nice lawn and garden to care for day to day. It's one of those things that connecting with nature, connecting with the outside, having ownership over your own space, I miss it. So I wish you the best of luck for all your consumers out there.
Yeah, thank you. And by the way, you can still do that. You can just have indoor gardening.
Yes, indoor gardening. We'll have you back to talk about that. Nice to have you on the broadcast. Thanks for joining us.
Thank you very much.
Don't go anywhere. Much more taking stock, including the latest from Money 2020 Scarlett Sieber, coming up after this very quick break.
Welcome back. I'm Scarlett Saber from Money 2020, and this is Jargon Translator, where we turn finance speak into plain speak. Today's term, stablecoin. Sounds chill, but it's the backbone of crypto. Picture this, you're deep in the crypto world. Price is swinging like a TikTok trend, up today, down tomorrow. You need something steady. Enter stablecoins. Stablecoins are digital tokens pegged to real-world assets, usually the US dollar. So while Bitcoin is out here living its best roller coaster life, stablecoins stay, well, stable. Why does this matter? Because they're the glue holding the crypto economy together. Traders use them to park money during volatility. DeFi platforms use them for lending, and some people even use them for everyday payments. But here's the twist. Not all stablecoins are created equal. Some are backed by actual dollars in a bank. Others, algorithms and vibes. And when those vibes fell, well, Terra Luna crash. So next time you hear stablecoin, think less boring and more essential. It's the calm in the crypto storm. And that is your jargon translated. Back over to you.
Tomorrow morning here on the street, we will get initial jobless claims crossing the wires 1 hour before market open. We'll get those numbers right around 8:30 a.m. And also before market open, some closely watched earnings reports you do not want to miss. That includes the teams from AB InBev, that's of course Anheuser-Busch, as well as Hyatt Hotels, Coinbase and DraftKings, as well as Pinterest reporting tomorrow at the close. That's going to do it for today's edition of Taking Stock. Thanks for watching. We will see you again tomorrow.